Hi, my name is Ryan from Rebohle Risk Management, and in this clip, I'll be unpacking the basics of spillage and environmental insurance. Should you have any questions or like to share your views, feel free to throw them in the comment sections. Let's get right into it. So, spillage and environmental insurance is a specialized insurance product that is designed to cover the financial costs that are associated with an accidental spillage of goods. So, like stock cover as well as goods in transit insurance, the subject matter of this product is also goods. However, the purpose of the cover is fundamentally different in such a way that stock protects the goods while they are being kept at a specific premises, and then goods in transit insurance protects them while they are being transported. So both of this insurance cover are designed to repair or replace the lost or damaged goods. However, spillage and environmental insurance does not cover the goods themselves. Instead, it covers the financial consequences arising from the accidental spillage of those goods, such as the cost of cleaning up and environmental restoration. So, in a nutshell, spillage and environmental insurance is designed for goods, but it responds to loss caused by goods instead of replacing or repairing the goods themselves. So, this cover is traditionally divided into two insurance components, one being the spillage cover and the other one being the environmental liability. Spillage cover provides cover for the immediate cost associated with responding to a spillage incident, including the cost of removing the spilled goods. And then environmental liability, on the other hand, it covers any liability that may arise as a result of an environmental damage following a spillage. So in practice then, spillage cover pays for the cost of cleaning up and cleaning up from the spillage site, including the cost of containing as well as removing the spilled substances from the affected area. And this part of cover may also extend to include debris removal, which includes the cost of removing contaminated materials and other debris resulting from the spillage itself. And it may further extend to disposal costs, which include the transportation as well as disposal of contaminated waste at an approved disposal facility. So before we move on, it is important to understand how spillage cover is structured. So unlike most insurance products, the spillage cover is generally not available as a standalone policy. Instead, it is usually purchased as an extension on another insurance product that directly insures goods so that it can provide additional cover against financial consequences of a spillage. So depending on the insurer or the product, it may be added to a stock policy or a stock insurance section so that it can respond to spillage incident that may occur at an insured premises. And it can also be added to goods in transit policy or goods in transit section so that it can respond to spillage incident that may occur while the goods are being transported. So the tricky part here is that the cover can only be triggered by one of these selected sections. So meaning that there must be a stock loss or there must be a GIT loss in order for one to be able to claim for spillage. So this includes insurable losses such as accidental damage, fire, natural disasters, or other insured perils before one can be able to claim for the spillage extensions. So now that we've covered that, then when it comes to the other component, which is an environmental liability, this one is designed to protect against the financial consequences of pollution or contamination that may arise from a spillage. So in practice, it pays for the cleanup cost, even though spillage also pays for cleanup cost. And then this will include removing pollutants from the affected areas. And it then extends to cover remediation costs, which include the treatment as well as restoration of contaminated soil, water, or other affected areas to prevent contamination from spreading even further. And then it further provides cover for rehabilitation costs, which include restoring the environment as far as reasonably possible, and to make sure that it goes to its original or acceptable condition, as well as covering the liability arising from the environmental damage themselves. And then, unlike spillage cover, environmental liability insurance can be purchased as a standalone, meaning it can be a section or a policy on its own. It does not have to specifically rely to any insurance that is designed for goods. So this gives businesses the flexibility to ensure their environmental liability exposure even when they do not require stock or goods in transit cover or any goods related insurance cover. So depending on the nature of the business, the cover can be arranged for spillage arising from activities at an insured premises. In this instance, the premises must be specified and noted on the insurance policy. And alternatively, the cover can also be arranged for accidents that may occur while goods are being transported. And in this instance, the vehicle transporting the goods must be specified and noted on the insurance policy. So where more than one premises or more than one vehicle is required, each premises and each vehicle must be specified and specifically noted on the policy in order for one to be able to enjoy cover. So let's now take a look at who needs this cover. So for spillage cover, it is generally anyone who stores goods and anyone who transports goods that may spill and result in an immediate response cost. And then for environmental liability, on the other hand, is for anyone who mines, manufactures, stores, or even transport hazardous and contaminating goods. So hazardous goods are substances that are noted under the United Nations Dangerous Goods Classification System, which consists of 9 classes based on the type of hazard they present, and this may include Class 1, which present explosives such as dynamite and fireworks. Class 2, which is gases like your LPG, propane, and chlorine, which and other gases that are stored in a gas cylinder. And Class 3, flammable liquid such as petrol, diesel, as well as ethanol. Class 4, flammable solids such as your sulfur, matches, and certain metal powders. Class 5, which is oxidizing substances such as your hydrogen peroxide. Class 6 for toxic and infectious substances such as pesticides and medical waste. And then Class 7, which speaks to radioactive materials such as your uranium as well as radioactive isotopes. Class 8 for corrosive substances like your acids. Then lastly, Class 9, which is miscellaneous dangerous goods such as lithium batteries, dry ice, and asbestos. And then the contaminating goods, on the other hand, may not necessarily be classified as hazardous. However, if they do escape into the environment, they may cause pollution and contaminate the land, water, ecosystems, and also may require specialist cleanup as well as specialized rehabilitation. And for example, this may include a cement slurry, which may require structural rebuilding if it happens that the spillage had dried up. And then the most popular one is dairy product, which can rapidly decompose and contaminate adjacent waters. And lastly, waste material, whether waste solids or wastewater, which may require specialist treatment following a spillage. And then now getting to understand who in the as per industry may need this. We know that the manufacturing sector, including your mines, factories, laboratories, chemical plants, food processing facilities, as well as refineries, may find this quite more useful. And it's mostly appropriate also for those in logistic industries, including marine and off-road vehicle operators, that operates on mines, farms, as well as construction sites. And it's also necessary for those in the storage, retail, and redistribution centers or sectors rather, including warehouses, storage facilities, and distribution centers. And it is highly purchased by fuel depots, gas stations, as well as wholesalers. So, beyond the environmental risk we've discussed, one of the biggest drivers for environmental liability insurance is compliance. So, in South Africa, Section 28 of the National Environmental Management Act of 1998 places a legal duty of care on any person who may cause significant pollution or environmental degradation to take reasonable measures to prevent, minimize, as well as remediate that pollution. So as a result, many businesses purchase environmental liability to support compliance with these legal obligations and to demonstrate that they have the financial capacity to respond should an environmental incident occurred. And for businesses operating within the manufacturing sector, environmental liability is often required as part of environmental approvals and operating licenses. Then within the logistics space, industries operate and operators or industry participants rather that are carrying hazardous or contaminating goods are frequently required to, particularly by mining companies and petroleum companies and chemical manufacturers and other major clients of theirs to maintain environmental liability insurance before contracts are awarded or even operations commence. And also businesses involved in storage and redistributions of these goods may also require this cover to support environmental compliance so that they can be able to satisfy landlords and meet contractual obligations that is imposed by suppliers and their customers. However, beyond compliance and contractual requirement, environmental liability insurance also forms part of an important operation consideration, which is risk management or risk management strategy. And as a result, we see even other entities out of the sectors that we've listed also finding the need of environmental insurance. Now, in closing, let's have a look at how the cover is structured, starting with the cover limit. So with spillage cover, the limit can either form part of the underlying policy section, since we know it's not a standalone, and this is sections such as your stock or goods in transit cover, and or it can also rather be specified separately as its own spillage cover limit, meaning that if you insure your goods in transit for 100,000 rand, 100,000 rand might be a combined limit to cater for replacing the goods while they're in transit, as well as covering any spillage related costs. However, the insurer will not pay more than 100,000 rand for both perils if you get to suffer a loss that needs both perils to both insurance perils to react. So where a separate limit is selected, it becomes exclusively available for responding to spillage incident, but it is not specific. If it's not specified, this means that the total limit allocated should be sufficient enough to pay for losses of the primary policy itself, plus the cost of the spillage itself. Then when it comes to environmental liability, it is generally issued with its own section limit, which presents the maximum amount the insurer is willing to pay for claims, since it is a standalone cover and it does not fall under any other underlying sections limit because of this standalone insurance cover. Now, taking a look at the excess structure with a spillage again, the excess may either follow the excesses applicable to the underlying policy or underlying section, or a separate spillage cover excess may be specified on the policy depending on the insurer or the policy structure. Whilst on the environmental liability side, it generally carries its own section excesses, which may apply independently, and it's not affected by any policy excesses, since this is a section or a cover on its own. Then lastly, getting into the insurance premium, or how much does this cost. For spillage, it can be included in the primary premium if the cover limit for spillage is in particular not specified, but where a separate limit is selected for it. Insurers typically charge an average rate of between 0.3 and 0.6% on the selected limit, depending on the risk exposure. So, for example, what this means is that if a spillage cover limit is 100,000 Rand, this will equate to an additional premium of approximately 25 Rand to 50 Rand per month. That's just an example, so that we can be able to understand those rates when we apply them to a specific limit. However, it depends on what amount of limit you take. And lastly, with environmental liability, cover is priced differently because of the exposure here is significantly a bit greater. So different rates are therefore applied depending on whether the cover is it relates to transportation risk or it relates to fixed premises, as this will have different probabilities as well as severities of loss, depending on where do you take the cover. And we know that motor is a little bit more riskier and high probabilities are there, even though the premises have higher severities, but there's lower probabilities. So the different rates apply to those two different sections as a result. So a general guide, let's look into, let's say, a motor related risk. They are commonly rated between 0.3 to 0.9%, while premises risk are commonly rated between 0.05 and 0.1, which is a little bit lower. And for example, on a limit of 10 million, since this component section of the cover is generally taken in millions due to the probable liability cost, this will equate to an indicative monthly premium of approximately 2,500 Rand to 7,500 Rand on the motor risks when we look into insuring a 10 million limit, and then approximately 416 Rand to 833 Rand for premises risk. And as with all insurers and insurance product, the final premium is determined by the insurer based on the specific risk profile and underwriting information that the policy may contain. So therefore, this is just indicative. It's not a factual price that will apply to everyone that gets insured for these limits. Now that we understand and have a clue of this, a quick disclaimer is that the video that we just shared and the content in this video does not constitute to any financial advice or product recommendation. Should you need any financial advice or product recommendation or also indicative code on this, please contact Rebohle Risk Management directly on any of the displays contact details. However, this is just generic information that we share to the public so that we can inform them about this product. If you find this very useful and also benefiting, please do like and share if you feel like it can benefit someone in your area. Thank you very much for tuning in.